Hello everyone, John Flynn here from Flynn Real Estate, serving Southern Ontario and based out of the Niagara region. Here again to give you my professional and honest opinion regarding the 2022 Canadian housing market. I am away right now, but just like my real estate work, I continue to work at all times, even on vacation. So I'm camping right now, and I did see a bear yesterday. Here's a shot of it. I took a picture. So yeah, today I just want to talk about the interest rate hike and a couple other things, the Quebec market, which I left out last time. First, I just want to give you some news from the ground. I am receiving emails from like the big builders in my area, $50,000 to $100,000 savings on new homes, and they're saying that these homes are $150,000 under market value. So yeah, they're offering big discounts to builders right now. They're still $150,000 under market value. Prices have gone down in my area, probably $200,000 at this point. So again, not that great of a discount, but yeah, they're shifting momentum, and it's interesting to see the emails and the promotions come in. So of course, the big news from the last week was the Bank of Canada's interest rate hike, 75 basis points or 0.75%, and it was immediately reflected in the big banks' interest rates, their variable rates. So now here's a shot of the variable rates. They're all over 5%, averaging 5.15 maybe, but you can see they're very close to the fixed rates now. Everything's over 5%, so there are some promos from some smaller lenders at 4.25 and whatnot, but again, the big banks are all over 5. So of course, the 75 basis point hike from the Bank of Canada was the big news, but they're continuing their quantitative tightening too, which means, of course, selling off or reducing their balance sheet and selling off some of those bonds that they purchased earlier on. So the news that I focused on was the next day from Carolyn Rogers, the Deputy Governor of the Bank of Canada, and what she had to say, because this was really the press release was the next day from Carolyn. So of course she says, getting inflation back to normal, and this is their goal, right? It's forget about everything else, it's inflation, the economy is not as important, and the real estate market and the rest of it. So I just took a few quick pointers from it. The Canadian economy is running hot. While housing resales and house prices drop from unsustainably high levels, the Canadian economy remains in excess demand, and inflation is more and more broad-based. And she goes on to say, interest rate increases take time to work. The housing market is one sector where higher rates are felt immediately, but it takes longer for interest rates to bring down price growth on things that aren't directly tied to borrowing. Given the lag between changes to interest rates and their impact on inflation and the considerable uncertainty surrounding the outlook, getting inflation all the way back to 2% will take some time. We also know there could be bumps along the way. So yeah, these bumps are the things that recessions and house price crashes or whatever you want to call them, right? So yeah, it's just interesting though, those quick pointers from the Bank of Canada. They're still very concerned and still scrambling to get this under control. And if you read the rest of the press release, you'll see that, you know, they expect this to stick around for some time, the inflation. It's not just going to go away. And even though you might see it dropping, like we did see a drop from June to July or July to August, I forget which month it was, and it was due to gasoline coming down in price. So again, it's broad-based, expect it to stick around, and expect there to be more interest rate increases. Who knows how much, but there will be more. They're very clear about that at this point. Of course, you guys know I keep an eye on the mortgage arrears. Our last update was from June. Of course, it takes a couple of months. It still dropped lower than before, so it's at 0.14%. So of course, a lagging indicator there, or a lagging time frame. It'll be interesting to see come the winter. I expect them to start rising soon, probably in the winter months, but yeah, I'll keep an update on that and see where it goes. And now on to Quebec and Montreal house prices, which I left out last time because the data wasn't ready yet. Here is the province of Quebec median single family home price, and it went from the peak of $451 to $399. It was $416 in the prior month, July. August was $399. So it's down 11.5% from the peak and 4.1% month over month. Now, all areas, Quebec and Montreal, their days on market have also increased lately. I'll update you on those next time, but yeah, days on market is starting to rise in those markets too. And of course, the Quebec, the province of Quebec, median condominium prices have dropped 7.1% from the peak and 2.3% month over month from July to August. I get a lot of people asking about Montreal. Montreal has dropped 9.5% from the peak for single family and 4.5% month over month. So that was a big month over month decrease from single family in Montreal. 25 grand, which in 1 month for the average price, it's pretty significant. And again, looking at, we used to see yearly gains like this, and we saw this in 1 month. So keep an eye on Montreal. You guys are well into your declines now, and we'll see how far they go. Not as much as, say, Ontario or Vancouver price-wise, but you guys are going to see declines just like the rest of the country. And of course, the condo median price in the city of Montreal went down 6.1% from the peak and 1.7% month over month. Not as big of losses in the condo market, of course, lower price points, but we'll keep an eye on it. And again, all days on market for all those properties have increased significantly. I'll update it next time, like I said. So yeah, that's all for today. We got a lot of people rolling into the trailer park or the campground where I'm staying. I had to stop the video like 5-6 times because these trucks keep coming by. It's like the big, check-in time right now. It's after 2 p.m. But until next week, thanks for watching, and I'll see you then.